General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.
Good morning and welcome to another edition of the Global Alpha podcast with myself and Finn.
Hey everyone.
Hope everyone's doing well out there. Markets have still been a bit questionable over the last week. We've seen a bit of negativity continue around the AI trade. So a bit of money coming out of those names at the moment. However, we've seen quite a strong earnings season continue. We've seen 82% of companies beat forecasts in the September period. So we've seen some pretty strong earnings, but the market seems to want to move in the downward direction. So we can see there a bit of a mixed bag over the week, but some of the key names there are moved into the negative territory. Healthcare, though, sort of the shining light there, and energy, where there's minimal downside. So it's been an interesting week for people's portfolios, I'd say.
Yeah, look, defensive sectors, definitely healthcare, energy. It's kind of the backbone of this whole AI thing. Obviously, everything needs energy. So it seems to be a bit of a defensive play. But yeah, kind of indicating that perhaps valuations have been a bit overboard. And even if we've, have some great numbers on earnings coming in, maybe it's not quite enough to justify what the real expectations are. So yeah, definitely an interesting week in markets.
Absolutely. So earnings that we saw come through last week, we've had CoreWeave. It reported strong revenues, but they were a bit smaller than what was expected. Rocket Lab was a 48% growth year on year, so we had a good report there. Oklo's loss widened, which was unfortunate, but somewhat expected due to the space that the business is in is quite infantile. So there's, plenty of room once they start to actually produce that profit for them to continue. Tencent, one of our past trades, is up on revenue 21% year on year. Quite successful, but we didn't see a great gain on that earnings report. Similar with Disney and Grab as well. Not some huge gains to be had there, but some decent reports. So next week, the big one, as you can see highlighted there in pink, is NVIDIA. So that's the one I think we'll all be keeping a keen eye on. Generally it has been the market leader to date. So, a good report from them could sort of help push the market back to the positive, but we'll sort of
have to be really, really good, considering the last kind of results on exceeding expectations. But yeah, we'll have to see. But yeah, it'd have to be really good.
Looks like it had a bit of a positive run over the week last week, so it's just interesting to see there's probably a bit of anticipation around a positive report, which is, as you said, a lot of that could be priced in already. If so, the report, would have to be stellar. Palo Alto, another open recommendation of ours that's reporting on the same day. Last report was really good, so I'm pretty confident they'll continue because that theme hasn't changed. And then John Deere's actually moved to the next week. They guided initially it was going to be on the 20th, but I saw just before we started the podcast they revised it till the 26th. So that is another one of our long-term recommendations, but we have another week before they report as well. And I will be paying attention to Intuit, even though it's not on one of our recommendations. It's in an interesting space, so I would pay close attention there, but I'm not expecting anything amazing.
Cool. Kind of moving on to the macro side of the market. Obviously, we've got Jerome Powell. He's set a bit of a hawkish tone. He's going to be in office until May. I'd say it's a certainty at this point that he's going to get booted out. He's definitely butting heads with Trump, got some opposing views on the market in general. S&P 500, look, it's historically quite overvalued. It's trading at a 30.4 price to equity. This historic average is actually around 16 to 18. So if we have a reversion to mean, it'd be fairly dramatic. Obviously, we're in a bit of a different market environment. We've got a lot of positivity around the AI thematic, which, isn't all smoke and mirrors. There's some real corporate spending going on. It's not, I suppose, akin to the .com bubble where there was literally zero revenue or very little. So there's something to be excited about, and something we actually are excited about, but it's just a little bit concerned about this short-term or mid-term price action while Jerome is still in office. The Fed, sorry. But yeah, overall, it's looking pretty bearish. We had a report from MIT a little while ago that 95% of AI pilots show negative ROI, and we've just had about 50% higher spending this year on AI. So it'll be interesting to see. I think the market might be a bit disappointed with the return on investment. Look, to be honest, new technology pilots don't generally provide a positive ROI from the bat. It's an investment in new technology, and it's fairly a long-term view, but I think that the market just might be excited about what the return will be on the AI thematic. But yeah, we're kind of expecting that to be a little bit anticlimactic.
Do you think investors have a sort of understand that time horizon, or do you think a lot of them are getting FOMO and that's propelling the price on the short term?
Look, I think with any exciting technology, people get really excited, and they get really excited too early. And we saw this with obviously the .com bubble. We saw this over and over again with crypto. People getting really excited. This is the new revolution. It's going to change everything, and that might be the case. And it definitely did with the internet, but it just took more time than we thought. So I think we're coming towards that level of excitement in AI, where, inevitably, the growth levels here, I don't think it's sustainable. And I think that a bit of a reversion to mean and then a reset is probably likely.
We're sort of seeing that play out now.
Yeah, a little bit. And something that was really shocking, actually, is we're seeing completely unprecedented levels of leverage in the market used to purchase stocks or securities, right? And this chart here is pretty shocking. We've seen in just under a year, the amount of leverage in the system go up by 490%, so nearly 5 times in just the last year. And comparing that to any other time in history, the only other time that we can really see anything like this is this small blip here, which was 2008. Obviously, 2008 was a pretty rough year for markets, but it's important to kind of note that the global financial crisis was not triggered by leverage in the stock market. It was triggered by leverage in the real estate market. So that's an important caveat there. But regardless, that was the only kind of time I could really see a blip similar to this in this chart. So it's definitely a bit concerning. Obviously, if we have more leverage in the system, there's a risk of, I suppose, cascading liquidations. And I think there's just a bit more anxiety when the market comes down. And kind of the house view here at MPC is, the next 6 months doesn't look super bright. And, in terms of, we've got employment data, we've got really potentially slow earnings as a result of this AI investment, which historically hasn't yielded a positive ROI. But then in May, we've got old Trumpy taking control of the Fed, which, we think is going to have a pretty positive impact on markets due to his kind of disregard of inflation fears. And just, he wants to, in the end of the day, he wants to come up on top and have a strong market. And I think he's going to push for that when he has more control of the Fed. And so we've kind of designed a bit of a strategy around this. It is sophisticated investors only, but essentially it gives us a 6-month look back period. Essentially, that means we get to buy the lowest point within the 6-month period of the S&P 500 and hopefully catch that low. And that's what we're looking at MPC. So if there's any interest in that strategy, obviously reach out to the team and we can have a conversation about it.
Absolutely.
Cool. Well, look, I think that pretty much wraps it up for this week with the Global Alpha. Unless there's anything else you want to add, Nader?
No, not really. I think buying the deep structure product would be good for any sophisticated investors, and you can really see what we're anticipating the market to do this year would yield some really good results for investors if they can participate in that structured product.
All right. Thanks, everyone.
Take care.
Catch you next week.
Ready to upgrade your investing? Discover Mosaic by MPC Markets for market news, investor education, top stock picks, podcasts, and real-time broker chat. Everything you need, all in one simple app. Sign up now for your 1-month free trial and experience investment content you can understand and actually use